probably time to kick Tina to the curb. Not just yet. I'm going to bring in Nicholas Wealth Management President David Nicholas. And David, you know, I read your note as well. S&P 500 still in something of an uptrend. We just talked with this Finn. He's saying 39.50 in that area. Where's your level of support where you start to rethink all of this? Where's your level on the downside that's got to hold to keep a sort of bullish narrative in place?
Yeah, Charles, I mean, that's spot on. 39.40, which is really the 200-day moving average. That's the point that I'm watching. So the S&P broke above the 200-day moving average on January 20th. So we all know that's a bullish indicator. But I think what gives me the most hope is the duration of time that it stayed above that. I can give you 70 years of data that shows anytime we get out of a bear market and the market stays above the 200-day moving average for more than 18 days, that's been the end of the bear market. We've been above it now for 23 days. Right. So I think that level holds. But what could break it is really the inflation data. And I think if that number comes in hot on March 14th, you get a break below the 200-day average, and then you got to hold those December lows. And I think those are the two levels we really want to be watching.
All right, so in the meantime, all these major firms, they just every day they're just hammering away. This market's got to get hit. It's got to go down another 10%, 15%. Do I hear 20? We got to get another 25%. I mean, it's an auction every day. How low it can go. Morgan Stanley front and center. But they did bring up three bear cases, and I want to bring them to your attention. One, asset classes other than equities. So everything else other than stocks is sort of factoring in that this is a strong economy, which has to see higher rates. Two, based on inflation expectations, the market has moved up. Maybe an assumption there, and consumer and producer prices are no longer declining with the same sort of speed. So, yeah, we peaked in June. We started to come down, and now they're making these small incremental moves. They're saying these are three reasons to be bearish on the market. What would you say to that?
I somewhat disagree. Look, the consumer is still strong. I think we all agree that that's not going to last forever. But this consumer has been extremely resilient in the face of a rising rate environment. But I do think there is a lag effect. If we go into a recession this year, it's not because of what the Fed is doing this year. It's because of the Fed's easy money for the last 10 years where capital has been misallocated. And I think we're just having a reset for the economy and the market to really be in a world where you may have a sustained rate environment. So I think it's more of an adjustment. What does a 5% world look like for rates if it stays there for a year or a year and a half? Right. I think we just have to reset our expectations on other asset classes. So I think it's more of a reset than it is this big dire change to the overall economy.
All right, so before I let you go, I know you've been buying the dip a little bit this week. A couple of names that you like.
The semiconductor industry is on fire right now. We saw NVIDIA's earnings recently, but there's another way to play it. So the name that we just bought, ACLS, they are a semiconductor manufacturer. What I like about them, George, they had 40% revenue growth year over year, so they're still benefiting from that. But you're buying them for 4 times sales, about 17 times forward. So again, it's hard to find good growth stocks that are trading at a reasonable value. So that's a name that we like. Lastly, TAP is Coors Light. I think this is a year where people are going to still continue to drink more beer. I have that feeling given the year that we're in. So I like Blue Moon, so I think it's a name you want to look at a reasonable price as well.
All right, and plus those other drinks, those seltzer things, man. You talk about a fad. They were they went faster than the Pet Rock. They were hot. Next thing you know, no one's drinking them. All right, David, thanks a lot. We'll talk to you again real soon.
All right, man.
I'm going to bring